In this video, I'm going to highlight which is the better dividend stock to buy, 3M or Raytheon Technologies. I'm going to look at a few different metrics to determine the answer to that question, so let's get right into it. First, let's of course look at the dividend yield. If you're a dividend stock investor, one of the more important things you're probably looking at is the dividend yield, and 3M is offering a 4.97% dividend yield right now, whereas Raytheon Technologies dividend yield is 2.14%. So 3M has more than twice the dividend yield as Raytheon Technologies. Next, what I like to look at is the sustainability of the dividend yield. And one of my favorite metrics to measure that is the payout ratio. The payout ratio measures the percentage of earnings a company pays in dividends. And in this metric, the lower the better in terms of dividend sustainability. And looking at this metric, Raytheon's payout ratio is 69.09%, where 3M is 51.68%. So 3M's dividend is more sustainable than Raytheon's when looking at the payout ratio. Next, I like to look at revenue growth over several years to determine what direction the company is going in. And both of these companies are in a similar direction, slow growing industries, growing revenue very slowly, or even going negative for a few quarters. And that's certainly the case for 3M, which had negative 3.6% revenue in its most recent quarter, where Raytheon had 4.55%. And of course, Raytheon is going to get a boost over the next few quarters as the Russian invasion of Ukraine is causing more of its weapons technologies to be used, and it's going to need to be replenished. And so militaries are going to order more of its technologies, more of its equipment in the near term. So it's got a little bit of a tailwind because of that right now. Next, I like to look at earnings per share for the trailing 12 months. I also like to go back several years in this metric. Again, I want to see the direction it's trending in. And with 3M, we see a very nicely growing earnings per share. Over the long term, its earnings per share is trending upward from close to $5 per share before 2014 up to $11.50 per share most recently. And then looking at Raytheon, its earnings per share is declining, starting from above $5 per share down to just $3 per share in the trailing 12 months. Of course, you can't talk about 3M without mentioning the litigation risk it's facing right now. It could be liable for billions of dollars with the pending legal issues it's having. That could hit its earnings per share. So that's something that investors should keep an eye on with 3M. Next, let's look at operating income and operating profit margin. On the top here, we have operating income, and Raytheon and 3M are very similar in terms of operating income, both of which reporting 1.4 billion in operating income in its most recent quarter. And then if we look at the operating profit margin in the trailing 12 months, 3M has a very big advantage, 14.8% in the trailing 12 months, where Raytheon was just 7.88%. And this isn't just a recent phenomena. 3M has long had the better operating profit margin compared to Raytheon, going back all the way to 2014. So 3M has the advantage in terms of operating profitability. So finally, let's look at valuation. And I looked at the price to earnings forward ratio and the price to free cash flow. Starting with the price to earnings forward, Raytheon is more expensive at 19.13 versus 3M at 12.09. And then similarly, Raytheon more expensive on price to free cash flow at 47, where 3M is at 18. So Raytheon way more expensive than 3M. That could partly be due to the litigation issues I mentioned earlier and the tailwind that Raytheon facing in the near term as militaries are increasing their spending, rejuvenating their their equipment and making sure to shore up their defenses as Russia is kind of posturing up its aggression with their invasion in Russia. And so that's a tailwind that could perhaps be boosting Raytheon Technologies stock in the near term. However, to answer the question, which is the better dividend stock to buy right now, I'm going to say 3M is the better dividend stock. All right, that's all I've got for this video. Thanks for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.